Welcome to Trading Lounge and the SP 500. Today I thought we'd start from the bigger picture here, and this is the count that I've got here, looking at wave 3 here, an A and a B and a C for wave 4, and then from wave 4 we're looking up for wave 5 up here, and in that case we're looking at wave 1 here with an A wave here, B wave here, and a C wave here with wave 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave. So that's the bigger picture that we're looking at. We've looked at this before though, not a big deal, and just breaking that down now into different patterns. So as you know, we've been looking at, well, wave 2 on this low here, and I've picked up this here, as I've mentioned before, from some of the other indices, just the best fit for this, leaving this a nice 1 and 2 here, but also 2 on a lot of the other this even though this is not the low here, as an A, as 1 and 2 and 3 and A, B, C for 4 and down for 5, and some of the indices this is the low here, so I'm okay with that. And wave 1 and 2 and 1 and 2 and 3 and 4, and moving up here for wave 5 of 3, then 4 and then 5 and so on. So just breaking that back down into the 4-hour chart here now. So from this wave 4 here, as you know, we've been looking up this is wave 1 here and wave 2 here, and then looking up here for wave 3, 4 and 5, moving up here somewhat higher. So we can expect this to play out here with an A and a B and a C wave here, and then wave 5 moving up here as such. So we need to drill into here, but one of the main takeaways here is that we're in from the 3000 here, which is a major trading level. Then we're looking at the minor levels, so 100, 200 and 300 are minor levels, and so is the next number up as well, 3,500. So the Fibonacci sequence is 1, 2, 3, 5. Now, if we get support on this level up here on the 3,300, the top of group 1, top of minor group 1, support here, then we'll be going up to 3,500 at that point. So we need a classic trading levels pattern here, and we also need a classic trading levels pattern there. And the classic trading levels pattern, or the variation of that, is this here. So if this was 3,200 here or 3,300, we'd be looking for an A and a B and, sorry, the arrival, the reaction, and the first high above the level, and then a corrective move down, and then support back over here. So in a bit of a nutshell, that's what we're looking at for 3,200 and 3,300. There can be a variation on this, and the variation is where it doesn't drop back below the level here, it just sits there. So it looks a bit like this here, a bit more simple. In both cases, we won't miss it, because in both cases, once we get that high in place here, then that becomes a trigger for the next move up through here. But then what we do is we just bring it down to the next level, to the next high, and if it drops below here, that's fine. We'll can sometimes get a better picture, a better entry over here, and sometimes we'll also take this low here if we've got a really clear corrective pattern here and we know what's going on. We can buy on the low, but I don't normally do that unless it's absolutely clear. Otherwise we wait for a safe setup there. So anyway, this is the variation of the classic trading levels pattern here, and also the other pattern that we don't look at much, is a little bit rare, is the overshoot pattern. So I'll look at it here, because these are really the only things that can happen at a level. So this is a level here. If it doesn't stop here and have the arrival and the reaction here and just go straight through here, then it normally runs out within group 1 and then folds back at this point. And then this, because it never stopped here, this level through here becomes the central theme through the price point, the level here, in that the swings, like this swing above here, will be roughly the same swing to the downside as well. So it kind of works itself into a triangle pattern, or works into this particular level here, and then takes off from that point. So the overshoot pattern here is it occurs a fair bit, but certainly not as much as this one. So just go to the 1 hour chart here. So with the 1 hour chart here, we're going to I think we spoke yesterday, we were just in here, and we'll look at that on the tick chart in a moment, but we're going to take a percentage profit here, as you know, so on this level here. That will enable you to breathe a little bit while this is all going on through here, because the same thing will occur here. Might just go to the tick chart. This little leg up here is not quite finished just yet, so I could probably move that up here a little bit now that I can see it. So I'll just remove this here. So we're coming into the arrival at this place. So we're looking for a little correction here and a little move up. So this is really all still the arrival, even though it's gone above. And then we'll look for an A and a B and a C wave coming back into group 2 here. And then we'll see the first high above the level come into play here. So the arrival, the reaction, the first high above the level, then the corrective pattern here, and then we move up from that point. So let's just go into the tick chart here. Where we spoke yesterday, we looked at this yesterday, didn't we? And we looked at this as the A wave, the B wave, and the C wave here, and then up for 1 here and back for 2 here. And then we got a little gap in the off hour there, based on news, but that's what you get in the third of a third. It looks like we've got 1 and 2 here, and then 5 waves up here for wave 3 here, and then I'm looking for an ABC back here for wave 4 that can pull back to the wave 4 of 1 lesser degree and the 38.2% retracement level, which is a little bit lower. But also looking at this here, it looks like we've already got an A and a B and 1, 2, 3, 4, 5 for C wave here. So we may already have it in place, but wave 4 can get a little bit tricky. It hasn't pulled back here, so this could also be, I know it's annoying when I give 2 counts, but it can also be like this here as well. So not that it matters for us, because you know, you may have taken profit here, or you'll take percentage profit up here somewhere, and then because from this point on, when we get to the 3,200, we're going to see swings, you know, and the swings, as I've just mentioned, let's just put a few things in. This is group 1 here, subgroup 1. So this is a minor level here, the 200, and the sub-levels are 1 degree smaller, and then you go into micro levels. So it's major levels, medium levels, minor levels, sub-levels, and then micro levels if you're operating down at that level there. But don't need that, don't need that. Yeah, so I was talking about the correction that can occur at this level here. I can't draw on this side, so it goes from group 1, top of group 1 here, down to group 2 here. That's the swing range that we have to give this market. It could come a bit lower through here, as long as it doesn't find this as resistance and drop. And here it can go higher here as well, long as it doesn't find, if it finds support on this level, on top of group 1 here, then we need to go long from that point. That's the thing. But this should move up into this space here and fail, and then roll over and come back and test the demand again down here. So looking for a move up here and then a corrective pattern at that stage. So that's that. I'll just flip over to the Nasdaq here as well. So it's a bit the same thing here as well. One of the things I want to point out here is that the trading levels coming up here is we've got a major level here, which is 8,000. And then we've got 1, 2, and 3 that make up minor group 1. And then we've got the midpoint here at 5. So it's the Fibonacci numbers 1, 2, 3, 5, and then 8 up here. But also 2 when we get up in between 5 and 8 here. Then the most important number here is the halfway mark between those two numbers, so the 8,650. But also 2, it's the 600 is important and the 700 is important. But in terms of that, they can create tops and bottoms and things, these numbers here. But this number here, the 8,650, what that does is that helps with the trade setup here. When the market's finished vibrating between these two numbers, this becomes the balance point, and it becomes the point where you can safely move in on longs or shorts. So it's quite an important number, and we'll get to see that, and we'll talk about it more and more as we get into that space. I do mention it a lot, but I'd like to keep talking about these things. So yeah, so this here would also have a little more to play out here for this, and that will pull back to the 38.2% retracement level here, wherever that high is here. So we can expect it to come back, maybe test that 500 maybe from that point, and whoops, daisy, and then move up from that space here, taking us higher here. We need a fifth wave there as well. There it is. Go on walkabouts. So I don't know what you'd like to do in terms of holding this here. I just think let's just keep the stop out of the way, and let's just go through with this one here. In this case, let's just hold it through this, and we'll look to get back in. We'll add another position over here, but by all means you can get a percentage at this point up here as well. When you take profit on the S&P, do the same here as well, but we'll get back in over here with this. But I'm just going to leave this here. I'm not going to take a percentage here because we're taking some off the other one, so we're okay here for the time being. Alrighty, thanks for tuning in. Cheers.